Welcome to the Broker's Lounge with Eddie and Carlo. Disclaimer, the information contained in this podcast is general in nature and does not take into account your personal circumstances. Head to the show notes if you want to book a free call to discuss your personal situation.
Hello everyone and welcome back to another episode of the Broker's Lounge. As usual, your hosts are Eddie and Carlo, and we're here on another week to discuss another financial related topic. This time it's around foreign income, but before getting into that, I always like to check on my favourite co-host, Carlo.
I'm still waiting for the drum roll, mate. Where's the drum roll?
How you doing, mate?
I'm doing very well,
Yeah.
thank you.
How's things going?
Going okay. It's been another very busy week. I think we're starting to see some improvement in the market and a bit of activity as well, which is always nice. So, the months are ticking away very quickly, so it's quite scary.
Nearing end of March.
And I look out the window and the weather's starting to turn as well. So
that's it.
That can't
but
be good.
The footy season started.
Oh, that's always a good thing.
And Richmond are up for a good start this year.
Well, probably by the time this gets
they would have lost a few
probably lost a few more, but we did get a win in round one, which is always a nice thing. So I don't want to talk about too much of footy in the podcast because it can become quite embarrassing over the years. So we'll leave the footy out of it. So
definitely. Look, I think this time of the year, this transition from summer into winter, especially down here in Melbourne, it can have its toll on you. But I guess just. I love this period.
Yeah, I was just saying, I love it. Autumn's one of my favourite seasons because you get those nice, crisp nights, crisp mornings. Daytime rolls out, bit of sunshine as well.
Nature's beautiful this time of the year as well.
Yeah.
June, July, I guess that's where things get serious.
It's that's when the tough slog happens.
That's it.
There's no public holidays to have a nice long weekend or anything like that. It's just well and truly into it before you know it.
But that's it. What do? Just keep moving, I guess.
Keep punching.
That's it. So foreign income, I guess it's a topic that isn't talked about as much out there. We do not a lot, but we come across one every now and then, and I guess it's an important topic for a lot of people to understand, especially people earning overseas income or living overseas and working, how they can invest in Australia, how can they invest for their future. So let's get into it. So
you're right, Eddie, because it's I'll be honest, like I haven't done a lot of the foreign income loans in the past. I've done a few purely because I think a lot of people don't know much about it, and that's the biggest thing. And I think there's a lot of banks out there who try and shy away from it. It becomes a little bit too difficult. So but it's definitely a good topic because there are definitely opportunities out there. There are a lot of people who are working overseas, expats, or living here in Australia but earning foreign income, whole range of things. So, and a lot of them probably feel a little bit frustrated in terms of what they can and can't do. So,
absolutely,
hopefully this will help those people out. So,
I've done a few, like I said, and I guess what reality is in terms of the income overseas expats earn compared to how lenders look at it can be quite different. On paper, it makes sense. Like if you're working overseas, at least most of the people I've worked with, like they're on decent incomes.
Correct.
200 US plus per year, and no tax.
It's got to be worth their while to be doing it. So.
Exactly. But then when you convert that income into financial, from a financial point of view, it can be quite different. So, first of all, what qualifies as foreign income, I guess?
I think one of the biggest things is obviously with a normal loan here in Australia, people can be earning normal PAYG income, they can be self-employed, whole range of different incomes, overtime, you name it. With foreign income, it's a little bit different. The main difference is no banks will accept self-employed people overseas. So you've got to be employed by a company, so earning PAYG, and it could be foreign employers or a multinational company, but typically, you'll need to be earning just a normal wage. There are banks who are taking into consideration overtime as well and commissions and all that sort of things as well, so that's always good. Pension and retirement income, a lot of people have got income coming from foreign managed funds, annuities, and stuff like that, they can be taken into consideration as well. So that's
So yeah, I guess regardless if you're living in Australia or overseas, if you're earning a foreign income, you fall under the foreign income.
Correct.
policy,
Yeah.
Okay.
Yeah.
Because I'm working on one as we speak, and the guy's a pilot who lives in Australia, but then he travels and flies cargo planes, and he earns in US dollars. So it is treated as a foreign income. And then I've got another one who is living overseas in Europe, and he's Australian, but he's living overseas, so that is a foreign income as well.
Yeah.
So, and they go under foreign income policy. And then, like you said, they have to be earning wages, like they have to be employed, not self-employed. And obviously we need to do the full verification.
Yeah, so your typical things like pay slips, tax returns, bank statements, employment contracts is always a good one to go by as well, to get a proper understanding as to how they're remunerated.
Yeah.
The other key thing is obviously if they're in a country where the English isn't the main language, contracts and pay slips can quite often be in other languages. So banks will require that to be properly translated by a registered translator.
NATI translator.
Yes, correct. So
now, how do lenders assess the foreign income, and what are the key things that people need to be made aware of?
Yeah, I think one of the key things is that there aren't too many lenders who will take 100% of the gross income. They will typically shade it. Some shade it to 70%, some to 80%. And then that's off the gross income, and then they convert it to Australian dollars. So it's worthwhile keeping note as well is that not every bank accepts all different currencies as well. There's typically just a main list of probably 10.
They grade them.
Yeah.
So there's 2 grades. There's like your golden currencies.
Yeah.
The US
dollar, Singapore,
the pound.
Yeah.
I can't remember.
Euros would be there as well. Yep.
And then you've got your Class B incomes, your like dirhams if you live in the United Arab Emirates, and a few other currencies. And then depends on which class it is, it gets shaded differently.
Correct. Yeah.
Okay.
Yeah.
So, for example, someone's earning 200,000 US dollars. So, like you said, this gets converted into Australian dollars based on the currency exchange at the time. So that is a big factor because currency fluctuates as well. So once that is converted, it gets shaded down to 80% or 70%. As you mentioned, there's few lenders that accept 100%, but then they charge a higher interest rate and higher fees. And then once that is done, they apply it as if it's an
Australian tax rates,
and they apply it as Australian tax
which
rates.
can work against some people who are potentially could be earning foreign income in a country where there's a much lower tax rate. And
the problem is they don't do negative gearing as well.
Correct.
Okay, so you're not benefiting from negative gearing.
Yeah.
It's pretty much they don't want to do it, but they will accept it if you've got a really decent income.
Yeah.
And from what I've seen, like you really need to be earning 200 US
At
plus
least,
to be able to do something.
Yeah.
Now the benefit sometimes is a lot of expats manage to save quite a decent amount of cash.
Yeah.
Because they're earning a decent amount, they're not paying tax.
And quite often they're in roles where their living expenses are taken care of by their employers. You know, the kids are well looked after.
100%.
They don't have to pay for any food, the whole work. So.
Exactly. So they manage to borrow like 50%, 60%, and just pay the rest in cash. Yeah.
And it's worth, sorry to interrupt Eddie, but with regards to the shading, it's important to understand the context behind that because you are dealing in foreign currency. So as Eddie mentioned, there's a lot of fluctuations in the currency. Hence, there's a higher risk for the lenders here to be lending out money based on an exchange rate at one point in time. So that shading of income helps them cover part of that risk as well. So in terms of the currency conversion, a lot of the banks just use I think it's the XE calculator with regards to whatever the currency is, the exchange rate is at that point in time. So
100%. Yeah, 100%. I guess if we are to discuss some of the challenges that we go through in getting those lines sorted, as you mentioned in the beginning, the biggest probably factor is getting all the contracts and documents verified and translated. Okay, this can be a bit costly. It can be not very efficient time-wise, but it's a necessity that we need to go through just to ensure it's been verified, it's been stamped and looked at by a NATI translator. So this would take a bit longer than usual, but it's something that can be managed and can be worked on. I guess the income verification process, like banking, can be different in different countries. Getting your bank statements and working through that part of verifying the income, and if there's overtime there, and then the pay slips need to match that income. And then obviously you need to verify it using the contract that you've got and make sure they all stack up. Obviously the exchange rate, and how it fluctuates and how it changes over time. Like, especially with the Australian dollar, like that changes quite a bit. So one day you can borrow a bit more than
it's always a challenge. You quite often giving clients a bit of an indication early on in the piece based on a certain exchange rate, and then by the time you actually get all the information and you go to lodge it based on that particular day there, things can change quite a lot. So
that's why having a buffer helps.
And
obviously explaining and setting expectations goes a long way always.
So
these probably are the main things. Obviously that is in preparation for submission, and then when you go through submission, you work through whatever conditions you need to work through, and then you're getting the approval done. The doc signing part can be challenging as well. So that's where also people need to be aware about, like, you can't DocuSign as an expat. And sometimes you need to actually go to an Australian embassy or consulate to sign the documents with someone.
It adds so much more extra time to the overall time.
And then docs need to be
sent back again.
So it can take a bit of time, and obviously you need to allow for, like, going and booking the time with the embassy or the consulate. So it can be like an hour and a half drive depending where you live. So these are things that you need to be mindful about. Now, if you work in like Singapore, or if you work in United Arab Emirates, it can be easier because they're smaller countries. Like, worst case, you're driving like an hour. But then if you're working in, like, I've got one in Germany, so it's got like a 2-hour drive to the closest embassy. So that's where, like, things need to be, laid out and explained, and it's something that you have to commit to, understanding why you're doing it, and you need to be on board with it.
Just setting the expectations right from the beginning that this is not going to be an overnight process where you can just here in Australia, we can get things done so much more quicker. We've got everything at our disposal very easily. The ability to sign documents not so easy. That's not the case. So planning is going to be a really big step in all this, and making sure you get ahead of the curve. Start talking to a mortgage broker who understands how foreign income works, and the choosing the right lender and all that sort of thing. So because then they can help you, walk you through the process, make sure that you've got all the ducks lined up really before you even start to look for a property. So
and plus someone to guide you through the way and work through all the hurdles that.
Typically, those people as well that are working overseas as expats, they're in pretty busy roles as well. So they don't really, they're going to be typically time poor as well. So that's where a good broker will help you, guide you through that process.
What do you think are some of the things that clients can do to strengthen, like, the process and ensure it's more efficient than?
I think it's just making sure that you're on top of all the various requirements from a documentation point of view. And like you said, obviously getting stuff translated as well. Having a good understanding as to where they're living. I've had cases before where clients are lodging a tax return in, say, in the US, and they've got that dual arrangement where they don't have to then lodge one in Australia. Now, I don't know if you've seen the tax returns or the equivalent over in America. It's so much different to how we do things here as well.
I've seen one years back.
So you've got to have a good understanding as to the differences as well. Getting things translated.
On that one, how is that treated? Like, if they're paying tax already in the US, do they amend it to match the Australian tax system and then they apply that, or?
So the paying tax in an overseas country doesn't really change the lender requirements. It's in terms of the assessment side of things. The difference is obviously if you're paying tax in America, there's an arrangement where you don't have to then pay tax in Australia.
Yeah.
So, but from a lender's point of view, they will still assess it like under the Australian tax system.
Okay.
So they're still working off the same type of
income.
the full income,
Okay.
obviously shaded, converted, and then applying the Australian tax rate. So, clients that are typically disadvantaged are going to be those that are in a country where there's a very low tax environment. But I've seen some of those as well, and typically the living expenses are a lot higher as well. So, but yeah, just being prepared and being ahead of the curve is going to be your biggest way of getting through all this and your best chance of success in getting a loan. So
yeah, 100%. And I guess it's very important as well, like putting through a strong case in terms of just putting your whole position, financial position in terms of your assets, what your investments are, what your savings are, what your plan is, what your exit strategy is. And
the stronger the story, the better the outcome.
Exactly. And that's always the case.
I was say, it's not very different to how we do things, even with people earning money here in
100%.
Australia. So,
100%. But like, I've seen some foreign income earners where they haven't got much savings, and because they're paying like higher rent, they're living a more expensive lifestyle, and these things can be tempting when you're living in like Dubai or Singapore or whatever, and like rent can be $7-8 grand a month, and then the lifestyle, the private schools, all that sort of stuff. So you won't be able to do much, even though you're earning a decent income. You might be disadvantaged in terms of your living expenses and your lifestyle. So that's where putting through a clean, strong case can go a long way. And obviously that's where our job comes in terms of helping you putting a strong case forward, asking the right questions and collecting the right information that is needed. And then probably choosing the lender that will accept what we're trying to do, because like you said earlier, not all lenders do foreign income. There's a handful of them, and their policy is quite different. So knowing which lender is
a lender who may be strong in one particular part of their policy may be quite weak in another part. So a good broker will package that all up and go, right, it might have to narrow down to say 3 different lenders who do the foreign income and say this one is strong with regards to this, but based on your situation, it might not be on something else. So really need to start narrowing it down to find the most appropriate lender. And it may not be the cheapest one, and that's always the case. Sometimes it's not just about price; it's also making sure that you got the best chance of getting the approval through as well. Because this is not for everyone. It's one thing we need to probably stress.
Yes, exactly. And if when I'm working on these cases, I usually look at the income, and if income's good, strong, then we typically try to go with the cheapest offer. And even if it's shaded at 70 or 80%, it will still get over the line. But then if servicing is really tight, then you have to go towards the more expensive option at the benefit of getting 100% income used. So it's working around these things. And then in terms of like the loan options, that wouldn't be much different than if you're a resident.
No, there's still the usual variable, fixed.
Working through your requirements, objectives.
Just tailor it towards your own individual circumstances. And like typically we see a lot of people who are getting loans on foreign income. It's predominantly for investment purposes, and they may look to then eventually move into the house when they come back to Australia, because 9 times out of 10 people do eventually move back. Typically it's always going to it's going to be the investment side of things, but not always the case. So it does change. So there are a lot of people who are earning income, but the families are actually still back here in Australia. So they need to.
Most of the people I work with, that's the ultimate goal. When we finish working overseas, we want to come back. We've got a house to move in, or we can sell and then buy our retirement property.
So there's obviously lots to consider with regards to loans when there's foreign income involved. Preparedness is going to be probably one of the biggest things, getting ahead of the curve and speaking with a broker as early on in the piece, making sure you're getting properly prepared for it all, getting the right documentation, the right information, so you can set yourself up for the best chance of getting a loan approved. So Lots to take away from today, Eddie.
Yeah, absolutely. And as usual, like your best thing to do is actually speaking to a mortgage broker to outline your steps based on your personal circumstances and what are you trying to achieve. And even if you can't do it now, like this could be 6 months, 12 months, 2 years plan, just so you know what you need to do.
Yeah.
But we definitely encourage, people to reach out and have a chat to see what their personal circumstances are about. But yeah, like recapping, as a foreign income earner, you've got options to invest in the property market, buy a property back home, and just work towards your future retirement or your future plans. It's doable, it's manageable. We've done it a few times. It's just a matter of coming down to personal circumstances. So yeah, I guess that will do it for today.
Yeah, and obviously if there's any questions that any listeners out there who may be thinking that we haven't covered today with regards to, say, foreign income or any other topics for that matter, but definitely reach out, leave us a comment, continue to subscribe to our podcast as well. Would love some feedback along the way, but until next time.
Until next time, thank you very much.
Take care, everyone. Bye-bye.
Bye.